The two-day Federal Open Market Committee, that's the rate-setting forum for the U.S. Federal Reserve, just concluded its meeting. There is concern that the lack of data due to the government 1 month already shutdown is obscuring the full data picture. U.S. consumer confidence, however, eased to a 6-month low in October as consumer confidence fell to 94.6 from a revised 95.6 in September, marking the second straight monthly decline, also strengthening expectations for further easing. Softer than expected U.S. inflation data last week also reinforced bets of a dovish FOMC ahead of the decision. According to the CME FedWatch tool, traders assigned a 96.7% probability of a quarter-point cut. The focus today could be on the presser and signals on next steps after the meeting. A further 25 basis points cut by December was the going assumption, but this is far from certain. Today, Powell announced the 25 basis point expected cut amid a typically cautious narrative. We do bring a clip from the press conference. The committee also decided to conclude the reduction of its aggregate securities holdings on December 1.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. Although some important federal government data have been delayed due to the shutdown, the public and private sector data that have remained available suggests that the outlook for employment and inflation has not changed much since our meeting in September. Conditions in the labor market appear to be gradually cooling, and inflation remains somewhat elevated. In support of our goals and in light of the balance of risks to employment and inflation, today the Federal Open Market Committee decided to lower our policy interest rate by a 1/4 percentage point. We also decided to conclude the reduction of our aggregate securities holdings as of December 1. Although official employment data for September are delayed, available evidence suggests that both layoffs and hiring remain low, and that both households' perceptions of job availability and firms' perceptions of hiring difficulty continue to decline. In this less dynamic and somewhat softer labor market, the downside risks to employment appear to have risen in recent months. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer-run goal. Estimates based on the Consumer Price Index suggest that total PCE prices rose 2.8% over the 12 months ending in September, and that, excluding the volatile food and energy categories, core PCE prices rose 2.8% as well. These readings are higher than earlier in the year as inflation for goods has picked up. In contrast, disinflation appears to be continuing for services. Near-term measures of inflation expectations have moved up on balance over the course of this year on news about tariffs, as reflected in both market and survey-based measures. Beyond the next year or two or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal. Higher tariffs are pushing up prices in some categories of goods, resulting in higher overall inflation. A reasonable base case is that the effects on inflation will be relatively short-lived, a one-time shift in the price level. A further reduction in the policy rate at the December meeting is not a foregone conclusion, as I've just said. So I would say that needs to be taken on board. We had, just say this, 19 participants on the committee. Everyone works very hard at this and takes their obligations to serve the American people very seriously. And at a time when we have tension between our two goals, we have strong views across the committee. And as I mentioned, there were strongly differing views today. And the takeaway from that is that we haven't made a decision about December. And we're going to be looking at the data that we have, how that affects the outlook and the balance of risks. And I'll just say that.
Hello, this is Global Business Insights, where we scrutinize the headlines and what they could mean from a business perspective. We don't make investment recommendations, nor do we give ad hoc consulting advice. Instead, we bring perspectives to enrich understanding of today's more complex context to support corporate decision making. To more business stories, Takaichi Sanae, Japan's new Prime Minister, and Donald Trump in Tokyo signed deals on trade, energy, and rare earths worth up to $400 billion. Trump is in South Korea also this week, where he meets with Xi Jinping tomorrow, hoping to sign a deal with the Chinese leader that could douse tensions and sustain a rally in equities. Earnings from Microsoft, Meta, and Alphabet due later today could also help keep the rally going. And we continue to see the impact of artificial intelligence momentum on business models. First, on central banks, AI may be evolving into a tool to actively shaping macroeconomic expectations, able to consider millions of data points, inflation trends, employment shifts, geopolitical chatter, and even market sentiment on media, and churn out forecasts faster than any central bank can meet. AI could be increasingly setting the tone that informs central bank decisions. AI's advantage is also in reading the world as a continuous stream of signals rather than isolated events. Analysts now see hybrid committees, rate-setting committees, where humans are supported and much more influenced by smarter algorithmic advisors. Still on AI, Amazon announced a dramatic 14,000 white-collar jobs cut as it ramps up spending on artificial intelligence. Amazon's boss in June had said efficiency gains from using AI would shrink the company's corporate workforce over the next few years. And it's not just Amazon. The Big Four accounting and consulting firm, PwC, is shrinking its global workforce and has scrapped an earlier pledge to add 100,000 workers worldwide by mid-2026 as it manages new challenges, including the impact of artificial intelligence on its service delivery model and on its margins. New AI tools imply a reconfiguration of the people pyramid and the skills mix. It's also about a different service delivery model requiring drastic rethink on the mix of people and skills required for a vastly different future technology space. PayPal shares shot higher as it announced a partnership with ChatGPT operator and released strong third quarter results. PayPal Holdings extends its services to ChatGPT users, and those shopping via ChatGPT will now be able to tap into PayPal's consumer protection service, while merchants will be able to access PayPal's payment processing tools. Also, OpenAI completes a long-awaited restructuring, helping it to unlock new investment. It said a non-profit called the OpenAI Foundation would now hold equity in its for-profit arm. Microsoft, which first invested $1 billion in OpenAI in 2019, said in a blog post that its stake is now roughly 27% and it's worth about $135 billion under this new structure. The imperative to be more profit-driven to succeed with AI has certainly become more compelling, and OpenAI is adjusting. AI champion Nvidia is looking to make a $1 billion equity investment in Nokia OIJ as Nokia pivots more into playing in the AI data center supply chain space. A collaboration involving Nokia's software for 5G and 6G networks, and Nvidia will explore ways to use Nokia's data center technology to strengthen competitive positioning of its AI infrastructure. The booming AI data centers business, thanks to the growing demand for computing capacity, helped the likes of Nokia beat Wall Street estimates in Q3 as the transformative potential of AI spurs momentum in deals to bridge the gap in supply. Nvidia also is investing as much as $100 billion into OpenAI, as well as billions into autonomous vehicle companies, Wave and OXA, FinTech Revolut, and AI companies like PolyAI. Nvidia said it had $500 billion in bookings for its AI processors and announced it will build 7 new supercomputers for the U.S. Department of Energy. Nvidia CEO Jensen Huang yesterday said he expects to make announcements with South Korean companies when he visits this week alongside Donald Trump's trip in Asia. More AI and digitalization comes with increased cyber attacks, and Marks and Spencer just ended a major contract with Tata Consultancy Services as the Indian provider was forced to conduct an internal investigation over being the origin of a cyber attack on the UK retailer. To the oil and gas sector, OPEC Plus nations are meeting November 2nd to discuss December 2025 production quotas. Saudi Arabia is reported to be leaning towards a modest 137,000 month-over-month increase, avoiding any abrupt moves. U.S. oil major ExxonMobil has signed a non-binding memorandum of understanding with Gabon's oil and gas ministry for deep water blocks, marking its re-entry into the African country following its exit in 2015. Markets are still watching for potential physical distortion from sanctions on Russia's Rosneft and Lukoil, with the oil market still in a wait-and-see mode to gauge the crude production and export impact of these sanctions. Meanwhile, Russia's number 2 oil producer Lukoil is looking at selling its international assets in response to these sanctions, adding that it could ask for a wind-down extension from the Treasury Department in case planned divestments get delayed. Still on oil, U.S. oil industries consolidation may be running out of steam as low $60 crude prices makes deals less attractive, and it's getting more difficult for private equity firms to sell undeveloped assets. However, gas deals have some room left. U.S. upstream deal making was reported to have dipped by almost 30% in Q3 2025, totaling only $9.7 billion, with Crescent Energy's $3 billion takeover of Vital Energy marking the single largest transaction. M&A activity is shifting to purely gas-focused plays, with the Stone Ridge Holdings $1.3 billion deal in July and Japan's JERA spending $1.5 billion this month, being deals that were noteworthy. Danish billionaire Anders Povlsen, founder of the international retail clothing chain Bestseller, yesterday pledged major investments in Nigeria's digital economy, entertainment, and sports industries. Also yesterday, Nigeria's Federal Inland Revenue Service directed banks, stockbrokers, and other financial institutions to deduct a 10% withholding tax on interest earned from investments in short-term securities. The new directive now requires tax to be deducted at point of payment on instruments such as treasury bills, corporate bonds, promissory notes, and bills of exchange. Asia Pacific markets were mixed. Japan's Nikkei 225, however, hit a fresh record high amid optimism on the new US-Japan trade accord. Nvidia, which has been the biggest beneficiary of a booming AI trajectory, climbed 4.6% in early trading today, emerging as the first US company to be valued over $5 trillion. at $5.11 trillion. Well, that's all we can take on this episode of Global Business Insights. This is Bode Oshosami. Thanks for watching. Bye-bye.